Decision Plus has been and still is a leading stock market service provider. From training to coaching, we cover it all. Try both our software as well as our coaching site, completely free for 10 days without obligation. No credit card is needed to sign up for the trial. The trial subscription will be automatically canceled for you at the end. DecisionPlus.com, your stock market service center. Real-time coaching has been created. We search and classify critical reports and technical movements. You can visualize or hear the best buying and selling opportunities. Get real-time advice all day long and 3 live coaching shows per day. Let us do the work and save your time for trading. Try marketgurus.tv free without obligation for 10 days in the menus above. Market Vision Plus is the trading companion of so many investors. Make your fundamental and technical analysis easy with Canada's #1 stock market decision-making software. Research, decide, and follow your positions with Market Vision Plus. See the menus just above this program and try Market Vision Plus for 10 days without any obligation after the show. When it comes to day trading, Trader Plus is the right tool. Track 50 quotes simultaneously. Create dozens of quick lists. Display as many as 30 real-time intraday charts at the same time. Watch the action with candlesticks or bar charts as fast as 10 seconds. See the market by sectors. Use the chart models already prepared for you. Try Trader Plus for 10 days in the menu above without any obligation.
Hello everybody, welcome to the Swing Trading Show. Today we're Tuesday, May 26, 2015. The question bar is open, folks. If ever you have any questions, feel free to ask them. One word to describe the market situation today: markets are digesting bad news from Europe. First of all, Greece came out today saying that they might default on their debt because they will be unable to pay pension, wages, if they cannot come up with an agreement with their creditors. Also in Spain, there's the party from the left that won elections. So some investors fear that we might have the same headache that they have in Greece with the left party, Syriza. So there's definitely those news that are actually bringing some fear into the market. This has created a wave of buyers into the US dollar, has a safe haven. And right now, this surge in the US dollar, what has this created? This has created a bearish momentum among the resources. So the resources that remain weak: gold, energy, gold, oil, natural gas, all of them are taking a hit. Now, what's the strategy? So today the show is going to be heavily concentrated on that in terms of the strategies that you could adopt on those resources sector. Let's start with gold. Gold, clear breakdown, clear bearish shackle. However, it remains limited because gold, you see there's a support there at 112.50. Usually we should have expected that with the uncertainty going on that a lot of investors would buy gold as a protection, but that's not what they're doing. The strength of the US dollar is actually have a bigger impact, and when the US dollar surge, gold goes down because it is more expensive to buy gold on the international markets. Now for the gold sector, the potential remains until 160. So we see that both for the gold sector and for gold, we still have a potential that's really limited. Even the short opportunities today for swing trading are limited in terms of potential. We don't even have a 10% potential for swing trading. Let me show you, for instance, Dator Gold, clear breakdown on that stock. However, where could that stock stop? Well, we see here a potential until 12.19. So from 12.70 to 12.19, it's not worth it for swing trading. However, it could be an opportunity for day trading, which means that you could short it for day trading if the stock goes below 12.70. Right, 1269, 1265, below that support intraday wise. And if ever the downward momentum continues on the gold sector, well, during the day, well, then you might actually have an opportunity to cash in around 1222. But it's really going to be limited. in terms of gain potential. Gold Corp as well. Look, Gold Corp could actually test the low of this downward corridor towards 21.26. The thing is, Gold Corp could be an opportunity for swing trading, but except that it's already oversold. So why should you short sell some stocks in the gold sector when, first of all, the potential before they reach either their former downward trend or their former upward trend is close, and we're on both stocks, Gold Corp, Dator Gold, they're all in the oversold situation. So those are the risk factors that you have to take into account if you're shorting the gold stocks today. One alternative that we have recommended on MarketGurus.tv is to go in with some bearish ETF. So at opening on MarketGurus.tv, we have released a list of the bearish ETF. And one of the most interesting of them is DUST, which is the bearish ETF on the gold sector. And why we prefer that is because DUST, it's a clear breakout and it has the potential to reach at least $16, which corresponds to that former resistance. So there's more potential in DUST. It can be more explosive, allows you to make more gains. ETF like HGD as well, it's an entry point today, has the potential to reach that former resistance of 1150. So there's more potential on those stocks instead of those ETFs, instead of shorting the stocks. Now, concerning the energy sector, well, we have energy sector that remains weak. However, I don't think it's a sector where we have several opportunities to short. If you take a look at the natural gas, the oil here, oil is taking a hit with the strength of the US dollar, but I want to see oil going below all those moving average here. So I want to see oil going below 1940, right? And for natural gas, we have a pursuit of the decline. The good thing at natural gas is that we went below the 50-day moving average, which is really bearish. But the thing is, we're close to the oversold situation, but we could continue the decline on natural gas. And most of the stocks that were going down yesterday on the TSX, such as Canadian Natural Resources and Cenovus Energy, that had to shut down their production in Alberta, well, those stocks are taking slightly a hit today again, but still remain within a sideways formation. Same thing for Suncor, but it's mostly in the US where we do have a lot of short opportunity, but still the potential remains limited. So we have published a list of all the best breakdowns in the energy sector on MarketGurus.tv that you can have access for free for 10 days. But I'm going to show you some stocks out of that list. We have, for instance, Consol Energy. I think it's one of the best for Consol Energy. It's clearly reversing also an upward trend for Consol Energy, going below the 50-day moving average. Now, if we put, let's say, a retracement from that top to that bottom here, what are the targets? Well, we see that we could reach 29.08, right, as a first target. And the next one could be towards that order support around 28. So the potential remains limited, but it could happen if ever Consol Energy pursues decline. Now let's take a look at the MACD. What is it showing us? Well, the MACD so far it's clear. We don't have a bearish divergence. We still have the MACD that's in negative territory, which is actually positive. For Canadian Natural Resources, the only thing I don't like is the fact that it's testing the low of its downward corridor. But if you want to build up your short positions in Canadian Natural Resources on New York, which is a breakdown today, that could be something. But as a exit point, it's clear it has to be whenever the stock reverses that downward trend, so above $32. So 10% loss potential, almost less than 10% loss potential, because you have to get out at $30. But as a gain potential, though, look, and before we reach the oversold situation, it's limited. Yes, we're below the 50-day, 100-day moving average, but a lot of congestions are at 29. So from 30.42 to 29, you don't even have a 5%. So really, I think the best alternative is really to go in with some bearish ETF, because markets today are just digesting the news. And if you take a look at the SPY situation here, look at this. This 50-day moving average is really an important point, because most of the times that we have tested it for the last 2 months, we actually had a rebound, right? So right now we are 2 points away, 210 to actually a couple of points away before reaching this 50-day moving average. So at this point, that might trigger a rebound. So this is why, even if you have bearish ETF already, I don't think that it's an opportunity for today to open and increase your exposure among those bearish ETF. I think with markets that are digesting the bad news, you still have to remain slightly, not patient, but I would say not be too greedy and buying bearish ETF, because you have to take into account that those bad news that are being digested could be digested today, and tomorrow some buyers could be back into the market, and the bearish ETF you open today would not play out well. So this is why you have to go in gradually, even on the bearish ETF on the resources, even on the bearish ETF on the markets as well. Same thing for, so if you open SPXU, for instance, and make sure that you open a half or third of a position, a normal position. SQQQ, make sure you open a third of half of a normal position. We know that SQQQ, NASDAQ could stop towards 4,988. And on the TSX, HXD, so if ever we have the energy sector that starts a clear bearish cycle, the financials that are going really down, well, we might see this definitely HXD perform really well, because HXD could actually, TSX could head towards 14,690. So it definitely remains the index with the most bearish potential. Now, Jules has a question. UNG broke its support at 1370. Now is it a go for HND? Well, yes, Jules, it's a go for HND, right? But as I said, do not open a full positions, go in gradually. I love the fact that it's breaking down its important moving average of 50 days, which is a good thing, close to the oversold situation, which is something I don't like. But I also found too that in the last Energy Information Administration report, that if we take a look here at the production change of the energy, we see that for all the region in the US, production has continued to increase, while the moving average usually has been really low. So definitely we have shale producers, all the natural gas producers that continue to produce. I was reading an article saying that around $60, that they're still making money because their costs are lower, the shale producers. So we still will have a continuity of that oversupply on the market, because at these prices, they're still making money, right? They didn't take a big hit as the Saudi Arabia was expecting. So the fact that we have an oversupply of production that will continue, the fact that natural gas broke down its 50-day moving average, I believe that there's a probability that it could continue to go down. We could expect at $13 or something that we could have a pause on natural gas. But so far, I would say it's a go in HND, but do not open a full positions, go in gradually. That's the strategy you have to favor on that bearish ETF.
Find answers to your questions by emailing your host at btm@decisionplus.com.
5 good reasons to manage your investments with National Bank Direct Brokerage. Commission fees fixed at $9.95 anytime for all clients and starting at only $6.95 for active investors. No administrative fees if you hold at least $20,000 in your accounts. Registered accounts available in U.S. currency. Powerful tools to help you manage your portfolio. Award-winning customer service and satisfaction levels amongst the highest in the industry. To learn more, visit nbdb.ca or call us now.
Real-time coaching has been created. We search and classify critical reports and technical movements. You can visualize or hear the best buying and selling opportunities. Get real-time advice all day long and 3 live coaching shows per day. Let us do the work and save your time for trading. Try marketgurus.tv free without obligation for 10 days in the menus above.
So welcome back, folks. So we have Jay here that makes a comment. Well, I don't make money, Chris. I think you're referring to the comments I usually use in the YouTube Chronicle. The more money you make, the happier we are. Well, there are opportunities to make money, Jay. For instance, today, the day trade of the day is FXCM on New York. So it really did perform really well. They had several opportunities to get it into that stock. One entry point here on the break of that resistance. Another one here on the break of that resistance. And also another one here as well, right? And here, the good thing is that if we put the stochastics on FXCM, look at how the stochastics was doing. We had a clear wave of buyers that was coming in, volumes were increasing, so that was a clear go. So if you bought here or there, I think you're definitely in the positions to take some profit. Now, if you bought here, you're a little bit more at risk. You have to get out below 160. So there are some opportunities to make money, Jay. By keeping following us, I think you will develop some techniques to be able to spot great trades and be able to be successful, right? It's not a guarantee. Of course, it's always a work in progress. Me as a trader also as well, I have to improve my trading skills. So it's a constant learning process, right? Now, Justin has a question about BKX. Is it a buy? So BKX, Justin, first of all, you have the energy sector that remains weak today. So a stock like BNK Petroleum, when the energy sector has such a bearish momentum, I don't think it's appropriate, the perfect timing to buy that stock. However, it's a stock that should be put on your watch list. Those are the two things you should look for. We have a big congestion with the moving average. A 200-day moving average there, which corresponds to that support at 74 cents. It's an important point where the stock could stabilize. Also, stochastically wise, we have some room to go for a correction. However, the stochastics could just stop towards 30%. So if the stochastic stops toward 30% around here, start to head up, and we have this 200-day moving average at 74 cents, that can be sustained, that can be maintained on BNK Petroleum, then I think at this point, it might be a point where you might say, you know what, I'm going to start building up slightly my long positions on that stock. However, I don't think that today it's appropriate to do so, because let's say I put a Fibonacci retracement from that top to that bottom here to give us where could that correction go. Well, we see it's clear. First, we have this support that's there, right? And the second one is that it's at 63 cents. So by buying it right now, I think the conditions you need to see is to see first an increase in volume, first thing, and stochastics towards 30%, 40% range. And also look at the energy sector as well. See, can the sector can at least start a new bullish cycle higher than 225, 226. So you have to take a look at the sector as well before considering BKX as a buy. A strategy, I would say, to summarize this is that if we have the energy sector that confirms a bullish cycle, if we have this stock that can stabilize at 74 cents, you could build up your long positions and put your exit point slightly below around 70 cents or so for BKX. But right now, it's not a buy. Now, Jean, why would you not buy NCU? Well, NCU, technically speaking, it's not a breakout because there's still that resistance that's there. However, can you buy some position? So can you increase your exposure on that stock while it stays within its sideways formation? One technique, Jean, you can use is with our market vision software, we click right and you choose one indicator. The one that we love is the volume unbalance. So you look at the volume unbalance here, we choose it, which is in the lower region here. So what does it show us? We see that within the sideways formation, volumes have been spiking, volumes have been surging. And actually with this, well, on Nevada Copper, there's definitely an increase in volume that's really present. However, the stock is overbought, right? And the good thing is that the 10 days above the 30-day moving average. And you see that if we put the Fibonacci retracement from that top to that bottom, that at $2, there's a big congestion there. So you could build up your long position because the stock remains within a sideways formation. Your stop loss should be around 184, 180, right? Which corresponds to this 200-day moving average approximately. And if ever the stock goes up, breaks out 198, your next target now becomes 218. So I think you could build up your long positions on a stock like that because of the volume imbalance, because of the 10-day that is above the 30-day moving average. Those are all conditions where we can see that Nevada Copper has some buying momentum. Now, Isabel, you did a good move today. Isabel, you bought IVN on the 21st. Around here. Good job. Great job there. Great job. Now, I take this profit this morning. Good job. Should I keep or sell the total? Keep the position. The company today, they announced a deal with a Chinese company for a project in Congo. We know this company had some challenges for cash. Now, with the Chinese partner, they have cash. So I think that this stock could continue to do well. So it's a hold on Ivano in mind. Good job. You took some profit on that stock. Good entry point. Really, you can applaud yourself on that trade. Now, what happened to CLC? Last questions I'm going to take, folks. Conacher Oil and Gas bought 4,000 and I only have 18 shares. Well, Conacher Oil and Gas, I know they had some challenges, some problems with their debt. I know they were close to bankruptcy. So one thing I would suggest you, Al, is to call your broker and ask what's going on with Conacher Oil and Gas. It's kind of messy what we have seen in the recent press release. So best thing I could tell you is to call your broker right now because I'm sure that with the challenges that they had, they either do some short consolidation or something with their debt or etc. So I won't be able to tell you all the details because I don't know. I don't follow this company that much. I just know they had some problems. And with CLC, of course, I would suggest you to definitely call your broker. And one last comment to finish: don't make any money either. Even if I work hard and follow the guru's advice, well, stock market is tough, right, Danny? I think that I cannot judge you for that. Not all advices pay off. We do make mistakes at times, but we always try to correct ourselves and make sure that the next advice, well, we take into account that mistakes that we did in our previous recommendation. And this is why so far, by taking a look at the facts, the performance of our analyst shares portfolio on marketgurus.tv, we continue to outperform the market. So we're being more prudent, of course, but still there's a probability you can make money. We're not saying we're gurus, but we're working hard to give you the best technical advice. And never forget, the more money you make, folks, the happier we are. See you tomorrow.